Good afternoon, everybody, and welcome to the first live version of ChartWatch. My name is Capolingua, and I'm from Market Index and Livewire Markets, and it's a pleasure to be joining you today for a chat about your favourite stocks. The deal is pretty simple. You ask about the stocks you're interested in. I'll give you my best technical and fundamental analysis reader. Before we do that, I'll just go through a very, very brief explanation of my technical model and trend following in general. And then we'll have a quick look around the grounds just to frame, I think, today's presentation, and also to discuss my portfolio management model, which seems to be confusing a few people out there. So that's that FRP or 2/3 RP. And then, of course, we'll get to your requests, which will be the vast bulk of today's presentation. Get the questions rolling in. Of course, you found the Q&A window. One or two, please, no more than that. Or if it's something about trading in general, the methodology, the money management mindset, also happy to answer those questions. Now, this should be a very familiar chart for most of you out there who follow my analysis on Market Index. It was in the evening wrap. Now it's in, obviously, the ChartWatch market section, dedicated place for it. And I think that's the best way to go. And my portfolio management model allows me to invest X amount of capital, or a limit of X amount of capital in a particular market. And that amount is determined by the overall index. So this has got nothing to do with what you're holding in your portfolio. This is about how much you can hold in your portfolio. And what I've found over many, many years, that this is a really prudent way of doing it. This is saying, well, you have to hold less if the market trend is uncertain. You can hold more when it is nothing's ever certain, but we've obviously got a stronger demonstration here of demand side control in the market. And if you know my analysis, you know I'm all about demand, supply equals price, and trying to understand who's in control of the market at one point of time. If the demand side's in control, we want to have more risk in the market. If the supply side's in control, we're backing off our risk, or we're looking to take some shorts. So we've been watching the Nasdaq Composite, which is our benchmark in the US. So if you're investing in the US, what's the relevance to Australia? Hey, what happens in America? Obviously, the old saying is that when they sneeze, we get the cold, and that's why we'd like to keep an eye on this anyway. So whether this dictates your local Aussie portfolio exposure is really up to you, but it might be something you take into account. We're certainly noting here the 3 tent pegs, I call them, of my investing methodology, my technical analysis methodology anyway. And I'm 100% technicals, ladies and gentlemen. Honestly, I do not care about any of the fundamentals. That might shock you, it might upset you, or it might excite you. But all of my decision-making process when it comes to what I will buy, hold, or sell comes 100% purely from technical analysis. It wasn't always that way. I certainly started out as a fundamental analysis. Yes, I have about half an alphabet after my name, I can assure you, in terms of finance degrees and education and things like that. I started as a fundamental analysis, and over the years I transitioned, as many people do in life, figure out what works, continue to do that, to technical analysis. So the 3 tent pegs are trend, price action, and candles. Many of you already know this from listening to me, but we do have people that are joining for the first time all the time. So trends, short-term and long-term trend ribbons. My short-term trend ribbon, of course, we prefer that to be green. We'd like it to be widening. That tells me it's strengthening. And then we've got the long-term trend ribbon. We prefer that to be dark green. The other thing about these ribbons is that we tend to see, not always, and there's no absolutes in anything, let alone technical analysis, but we tend to see them act as what I say is dynamic zones of support or resistance. That's the common term, but I don't like using those words, support or resistance. I like to use the words excess demand or excess supply. In practical terms, we tend to see the price bouncing off these levels in an uptrend, or bouncing down from them in a downtrend. Okay, we can see an uptrend on screen because we're looking at the Nasdaq. And I will often say things like, well, when the price closes beneath the short-term trend ribbon, that for me tells me that the short-term uptrend is over. It doesn't mean we're in a short-term downtrend. It just means we're not in a short-term uptrend. We're probably more in a neutral phase, and I might need to do something with my risk management model. But looking very, very good here on the 2 trend ribbons, both up for me. The other important thing, of course, is to then move into our price action, which is the relative position of our points of demand and points of supply. Point of demand is simply a trough, another word for a trough. Point of supply is another word for a peak. I don't like troughs and peaks because they don't tell you what's happening with demand and supply. I don't know if you've noticed, ladies and gentlemen, but everything I do always comes back to demand and supply, and I do think that's a really good way to organise your thinking about markets. We want to see the relative positioning of those points of demand obviously, and rising, and points of supply rising. So points of demand rising means that demand is coming in at a higher level each time. We're reinforcing that demand in the system. It's another a good example of demand side control, and points of supply rising as well, which means each time we get up to a point of supply, we're actually pushing through it. We're removing supply from the market, and that's obviously a good thing. And we can see that on screen with the Nasdaq, with those rising peaks and troughs. And I'm only going to do this probably once. I won't have to do it after this, just to illustrate what those peaks and troughs look like on a chart similar to that. Rising peaks and troughs. And then the final flourish, of course, is the candles, which is the shortest term aspect of what I do. We've gone from really sort of longer term, haven't we, drilling down into the really nitty-gritty of the day-to-day. And obviously we want to see white candles, preferably downward pointing shadows, because downward pointing shadows point to where buy the dip activities occurred. If we've got a predominance of demand-side candles, that's a good indication of demand-side control. And the opposite, of course, is the one we had last night on the Nasdaq, that black candle there, low close. You might also see upward pointing shadows. Upward pointing shadows are a great indication of sell the rally activity, and that's an indication that supply side is coming in to take control of price. Now, obviously not a great candle last night, but we've seen black candles in the Nasdaq before, and obviously the trends tend to prevail in a fairly short space of time. So certainly that's a warning signal for us, but not enough for me to change my risk management model. And it's my own personal risk management model. You can do it any way you want, of course, of FRP, full risk position. That's all that means. Now, if things start to progress, so that, of course, we start to have more black candles and move into a predominance of supply side candles or lower peaks, that would be a first signal that we're having supply reinforcement now, lower troughs, demand removal, moving beneath the trend ribbons. That's when we're going to start to potentially take some of that risk off the table. Going to move into, and if you're wondering what software package I'm using right now, it's irrelevant. Use any one you want. This happens to be Amy Broker. It's just the one I've used for about 20 years now, and it's the one I'm comfortable with. Use the one that you're comfortable with. You don't have to use this one. I just know where everything is. That's all that's about. On the ASX 200, we're seeing a very different picture from the Nasdaq. We don't have those double greens, do we? So straight away, we know that the fund managers that are investing in Australia have a far more mixed view of whether they should be owning Australian stocks or owning cash, because they're your two alternatives. In the US, it's far clearer that we're in a demand-side controlled environment. Here, we're in more of an equilibrium phase, as evidenced by that short-term trend ribbon, which has actually turned amber. It's neutralised. Of course, the long-term trend is still up. We should respect that. At some stage, we would, therefore, expect is too strong a word, but we would associate a higher probability with that short-term trend picking up at some point. In the meantime, certainly it is more neutral. We're seeing mixed peaks and troughs, aren't we? We've got some lower peaks in there. We've actually got some lower troughs as well, but maybe this last one over here, which has the blue line, is higher than the 87.31. So it's very sideways, and I think that's the key takeaway here. So if the biggest fund managers that control our market aren't quite sure in the short term whether they should be invested, then for me, that suggests to me that maybe I should have some trepidation over whether I should be invested or how much I should be invested. That's kind of the pointy end of the stick. So I don't know if you remember, but in the evening wraps, on the old tin pot, as I like to call it, we've moved to a 2/3 risk position. Well, I certainly have. You can, of course, do whatever you need to do. But I just think we don't want to be fully invested here until we can reconcile what's happening in that 888 to 8731 band. Hey, nice big white candle closing above those 4/8s, and it's back on again. We'll probably go up, test 9055, and everything will be hunky-dory. If we close beneath 8731, I think it's a sign that the supply side is taking control, and that's the extent of its meaning, ladies and gentlemen. It doesn't mean it's the end of the world, doesn't mean we're about to crash. It just means that the supply side's in control, and then it dictates how we behave. All right, so that's the portfolio management model, setting the scene there. Now I want to, not that it's going to dictate necessarily what it means for your individual stocks, but I think it's a nice place to start and a good foundation for how I like to do things. So I'm going to get to your requests now. I'm just going to change screens just so that everything we type now in here, for example, if I say, this looks good, not Google, this looks good. When I click away from that and we come back, that writing's still going to be there. So hopefully you'll tune in next week and the week after. We'll start to be able to track some of these calls is probably too strong a word, but some of the analysis we've done. We'll see whether it's turned out well or not. I think if you know me long enough, you know that more often than not, capital MOTN, the stuff I say tends to turn out pretty well, and that's just a more often than not means sometimes it doesn't. Okay, let's get to your questions, and welcome to the high triple-digit people that are in attendance. So I better get my skates on and start to answer some questions. Stephen's opened with what do I think of platinum and palladium? So that's an interesting question, and we're going to have to go to a different screen for that. Sorry to complicate things even more, but I've only got limited, data in that AMI broker, and I will need to go elsewhere for other applications. This happens to be TradingView, but let's get into platinum and palladium. And for here, I'm going to head to the futures, and a decent candle last night, and that's last night's candle. I'm just going to put the X over it. This is the live candle because these are futures. They continue to trade in most cases 24 hours a day. And again, if you read my stuff, you know I discount the live candle. It doesn't exist. Pretend it's not there. We only make our decisions on a closed candle because it's closed. Demand and supply have made their final decision based upon that time period. Anything can happen in the new one, so please discount it. I think it looks very good, Stephen. And again, I don't have to overcomplicate things. And if you also notice, no RSI. Where's the RSI? Where's their MACD? Where's the Bollinger Bands? And they're not on my screen. Fibonacci retracements, GAN, Elliott Wave. I ask you, how do all of those things come back to the most basic tenets of economics, which is demand, supply, and price? And that's all I use, ladies and gentlemen. And I've gone through all that complicated stuff over the many, many years I've been doing this, and I come back, and I keep coming back because, like I said, if something works, keep doing it. If something doesn't work, stop doing it. This stuff works for me. Short-term uptrend, it's so easy. What's the short-term trend? Oh, well, we can start measuring it with all these other convoluted things, or we can just say, well, that trend ribbon is green. It's light green. Long-term uptrend is in place. We've got dark green on the other ribbon. Price action is a little bit mixed. So we're talking about consensus. We're talking about how decisive the market is towards platinum. And if we have a consensus, we should have higher peaks and higher troughs, rising points of demand, rising points of supply. And we should see nice extensions. We should see nice extensions in what I call the motive phases. Motive simply means moving, and shallower pullbacks in the stagnation phases. Okay, and I think more generally, certainly through this phase, that is definitely the case. So that's a tick. But we don't go up forever all the time. We're going to reach a level where somebody says, you know what, probably platinum's a good price, and some fund managers start selling, and that supply hits an otherwise demand-side controlled market, and it causes equilibrium. That's literally what's happened. We've got excess demand, supply comes in to meet that demand, and we move sideways for a period. Why might we move sideways? 1,500. It's a decent number. Psychologically, we, as traders, as humans, we get pegged to these sort of round numbers, and that in itself, just that simple little thing could be enough to just cause somebody to go, you know what, I'm going to start to supply, and that causes the equilibrium. So have a little bit of a pullback, a little bit of sideways move as we consume, as the demand side, which we know is control. How do we know the demand side is in control? Well, look at those moving averages, right? We know the trends are up. We know we've got demand side control. As that demand side consumes that supply, chips away at it, we start to move sideways, but we're still making our higher peaks. The candle's actually, after the initial move here, predominantly demand side in nature, telling me that I've got buy the dip, I've got pervasive buy orders, and then we get that sort of explosive, emphatic, long white candle that actually I'm pretty sure closed us certainly above the highest close, not quite above that point of supply, but enough of a way into it to tell me that that supply is largely being consumed. I mean, if we had a big upper shadow here, it would tell us that the supply is still in place. What is an upper shadow? The little line bit that points out the top of the chart. Not too many here, and that's a really good sign. The downward shadows, they're by the dip. They're the ones we do want to see. So I think this looks very good. The 310 pegs all in place for me. Where could it go? Look, I don't know. And that's the thing, isn't it? I can't tell the future, so I don't know where it can go. The best I can do is say something like, well, historically, there's been a historic point of supply around here. And if there was supply around there in the past, there may be some supply there in the future. And when we get there, we'll see the candles. The candles will tell us how much supply is actually there. So probably looking at a level like 17, 10, 17, 15, upwards of there's the next very moderate point of supply, and that's from a hell of a long time ago. So, I don't know if the market's looking back that far, to be honest. So to answer your question, Stephen, I think platinum actually looks pretty darn good here, and we're in a monthly chart, so let's go back to a weekly chart. And I think Palladium also looks good, not as good. Obviously, it doesn't have that big breakout, but otherwise we are still seeing a short-term uptrend because the ribbon's green. That's it. That's all you need to know. We are actually seeing the trend ribbons. I didn't talk about this in the previous one, but I'm sure it was the case. The trend ribbon's dynamically supporting the price. That's always good. From previously resisting it to supporting it, that's the transition of the short-term trend. And of course, we also see that long-term trend ribbon start to support price there. Candles are pretty good. Price actions, okay, of course, but otherwise, this one still appears to be exhibiting demand-side control. And happy to back it on that basis. How much you back it, well, that's up to you. So hopefully that answers your two questions and again gives you some more insight into how it works. Why do my trend ribbons do that? I don't know. They just do. And it doesn't matter, does it? They do, and that's good too. All right, let's head away from here and back. I reckon probably going to get some Aussie stocks next. John's got really looking forward to the series. So am I, John. He gets a lot from my analysis. Appreciate that. Do you think GQG and HMC are going to come back? They seem like strong stocks. Okay, well, let's head over to the AMI broker screen and check that out. So we're going to go up here. Don't worry about some of these things I do on the side. That doesn't matter. GQG. And look, what a great place to go next, isn't it? We've seen double greens, great price action, predominance of white candles, and it makes so much sense to come here where we've got the exact opposite. This, ladies and gentlemen, for me, is a picture of supply-side control. Why don't the fund managers like GQG? I don't know, and I'll never know because I can't possibly go out and interview them all and get their views. We do a lot of that on LiveWire Market, so head over to the LiveWire site and they do that interviews and you can get some insights into why fund managers don't like it. What I love about what I do, and that's technical analysis in general, is that once all those very clever people, don't get me wrong, I totally respect the whole profession of fundamental analysis because it's vital for what I do. If they don't do their work and determine what is actually good value and not good value in the markets, then I can't get my charts and I can't follow my trends. So I would put to you here that some very, very smart people, the smartest people that control the important money in the market, not our money, because our money doesn't really matter, does it? But the important money in the market that moves markets with the best systems, the best analysts, they pay millions and millions of dollars to maintain all of this. They don't like the stock. Again, we don't care why, we just care what they're doing because that's ultimately how we make all this money is based upon where the price moves, and that's what they're doing. Now, those very smart people who looked at this, I'm guessing they think it's overvalued. How do I know that they think it's overvalued? Well, it ain't going up, is it? So the people that have cash right now and who are looking to allocate that cash, think about what they think about this stock. They're not putting it in here. How do you know they're not applying cash to this stock? Look at the price. The people who have the stock, they're doing that same analysis and they're also realizing, I would put to you increasingly realizing, that this is not a great place to have their money either. And that's why they're increasing their supply into the market. And that supply is not finding as much demand as it was, certainly all the way back here. Look at the trend ribbons. Look how well the trend ribbons cradled the price on the way up. And they cradle the price until they don't. And you all, I shouldn't say you all know, but many of you know that once we get to about here, that's pretty much lights out for me. But eventually the trend changed. So again, we need to, I guess, disassociate ourselves from this, from the market, take ourselves out of the market, assume that we don't know anything, assume that our opinion doesn't matter because, let's face it, at least one of those two assumptions is very true. And really, really become a disciple. That's what I call it. Become a disciple of what you see on the screen, of demand and supply, and just follow it. And now, we don't know tomorrow, GQG could make some great decisions in their business, in their company to turn it around. And I swear to you, instantly those analysts are going to find that and they're going to start to change the demand-supply tensions. And then the trends will turn, the price action will turn, and the candles all of a sudden magically become white. And that could happen tomorrow. So I don't know the future, and I'll keep telling you that. All I know is the way the market is behaving today, And right now I can tell you that we've got excess supply in the system. It looks pretty motivated to me. Certainly I think demand has been hanging on. There's been some volume, quite a bit of volume actually coming in recently. So when you see volume in the market, it's just buying and selling. I've heard lots of silly things from so-called, learned and educated technical analysts about volume that are just wrong, and they'll say things, silly things like you want to see your stock price going up on high volume, silly things like that, or if your share price is going down on low volume, that's okay because there's not much volume. Silly things, and we'll go into some of the reasons why those are the silliest things you could say about volume, hopefully down the track. But I've got a lot of people I need to get to stock requests. So my point here is that we do have some demand hanging on. Lots of volume means lots of demand. But lots of volume also means lots of supply. And the price action tells us how motivated each party is, right? So demand is hanging on. I believe they're there. I believe they've found a level where they think they're finding some value. But supply is overwhelming them. And we could get to the point where actually that well of demand that's holding this thing up is evaporated, it's consumed, a very important word, and all we've got left is supply. And with supply starting to see that demand is gone, they may become more motivated. And this is often why you get these, we call them breakdowns, isn't it? I mean, this looks to me like it's fixing for a breakdown. It's consolidating, the demand gets consumed, and then the supply, because they are motivated, because they understand the value of this stock is maybe $1 or 50 cents or whatever they think that value is, that's their bottom limit. They don't care if they sell at 169 or 167 or 165. They will get rid of that stock and as much as they can to whoever's going to take it. And we can see that potentially the people who are taking it, well, they've been backing away, and maybe that confidence might dissipate fairly shortly. So I don't know if you know, if you follow my ChartWatch ASX scans, you probably do. That's probably how you found me. But this has been on my downtrends list as a featured downtrend several times for obvious reasons. So those things don't appear there by accident. And I guess by coming and hanging out with me for a little while on a Wednesday, you get to start to see some of the thinking behind it. Let's get to HMC, and very simple. I'm going to go ditto. I won't spend all the time re-explaining it because I don't need to. Is this a stock that is exhibiting strong, determined demand-side control? Because they're the stocks I like to invest in. No, it's not. In fact, it looks like a stock that's exhibiting strong supply-side control. What do the people who own the stock know that makes them so jittery about owning it? What do the people who own cash know that makes them not want to invest in it? I don't know, and honestly, I don't care. So if I had to go buy, hold, sell, this is just my own personal view. Well, I think you know which camp I'd be in for those two stocks. And as I said, I don't know the future. These things can change, but I assure you, as they change, we'll get those signals coming in through the technicals as well. We'll never get in at the bottom. Hey, I'll never get it at the bottom. You guys might. You might get lucky by picking the bottom. Well, that looks cheap, and buying it. I can't do that. And we'll talk about some of the things I need to see, I'm sure, as we get through some of these other case studies as to what I need to see before I can buy something that has been beaten down, like these last two stocks. Okay, let's go to Graham, who's asked a really broad question, but an interesting question. Are the banks still worth holding? Now, there's a lot of banks. Permit me, because I said we're only going to do two per person, just to stick with the top four. I'll give you four, and obviously we'll go to the big four. And we can answer those questions in the charts very quickly. We've still got a short-term uptrend here. So that's a tick. Long-term uptrend is up on ANZ we're talking about. That's a tick. But the price action is not as good as it was. We're seeing some indecision come into the market. Okay, and if the market's not, if the market can't decide, then I start to doubt my own conviction, I guess, in holding something as well. But prior to that, look, the motive phase is very strong here. We should expect some sort of consolidation. You need to digest big gains like that, because there are people out there who go, oh, that looks high. They're anchored in the price of what ANZ was for the last 6 or 12 months. And it just looks high, it just feels higher than their brain can't comprehend, and they will sell some for that reason. Or other investors, and we've got short sellers at play as well. They might go, well, that's overvalued, and they might start to supply into the market, create supply we're talking about. Now, the question is how demand responds to that supply, and it looks like it's responding fairly well. Notice I'm not giving this the glowing endorsement here. A little bit concerned mainly about the price action, and also potentially about some of these candles that are coming in. We can see there's there's just too many black ones in there. It's not the end of the world. I would be happy to be maintaining my prevailing risk position here. So I don't know what yours is. So that's why I use a term like prevailing. Whatever you've got on it, I think is the way to summarize it. Until we closed beneath that level there because that is an important, I feel, point of demand. And if that demand is consumed, then, well, where's the next demand beneath that? And I would say, well, the long-term uptrend ribbon tends to be a point where the price sort of comes down to and bounces off, and maybe we could see it down there. There's also other historical points of demand through here that may come into play, and that sort of is an area that's shaping up. Now, also we need to consider, and this is important before we talk about anything, we should have started here as well. Are you a long-term investor, or are you a short-term, somebody who's focused more on short-term trading? I've got to tell you, I'm the latter. I'm more of a short-term trader. I've got a time frame of anywhere between, it could be 6 minutes up to sort of, 6 weeks to 6 months is probably a better way to put it, but I don't know how the candles are going to fall. That's why it could be 6 minutes. If you're longer term than that, then I suggest you take everything I'm going to teach you in these Wednesday sessions and just click that W button, okay? And that's literally all you need to do, in my opinion, to go from a short-term trader to a longer-term investor. And everything is still the same. Now the trend actually looks much better. We're not worried about the noise that last little bit of price action has created, or the fact that there's a few black candles in there, because they're actually not showing up anywhere near as bad here. But we do have a strong long-term uptrend, a developing short-term uptrend as well. And you're making these decisions literally on a 5 times longer basis than you were if you click this D, because there are 5 D candles in one W. And if W is not short enough for you, if you want to go even longer term, then you can go to here and use exactly the same principles. And that's how we change the time frame. Now, to keep it simple, it would be crazy for me in such a short space of time, we've used up over half of today's presentation, to talk about each of those metrics. So if you permit me, I'm going to stick with the D, and then I'll let you take some of these concepts and apply them to your own personal time frame. We've got to set some of these sort of boundaries. So look, I'm okay with ANZ. I can see it's got some issues. I've told you where those issues would be, and on the basis, as a short-term trader, I would start to manage my risk underneath that area. What does that mean? What does it mean, manage your risk? I'm a true believer, and it's something that took me a very long time to learn the benefit of, is not being all in and all out. Okay, so I will buy in to a developing uptrend in small increments, and I will sell out of a trend that is waning in small increments, depending on the urgency as dictated by the candles. So it's just about managing some risk, and I'll leave it there. I don't want to get any more specific than that, because I can't get any more specific than that, given the licensing regime that we have here at Market Index, or our ability to comment on certain things. But that's an area where personally I would look to manage my risk on ANZ, but otherwise it still looks pretty much intact. I can do the other ones much quicker now. CBA, what a great place to go from ANZ, where generally strong but a few issues, to CBA, which I think has major issues. And I don't know if you remember, but on the way up, all the way through here, it was a ChartWatch ASX scans uptrends darling. It featured probably 60 or 70 times, once a week. It was a feature chart. And then all of a sudden, around here, I don't know if you noticed, but CBA stopped appearing in those uptrends list. And it actually appeared for the first time in my downtrends list on that candle. Okay, because I see the hallmarks of trend change here. Certainly the short-term trend has changed, it's down, that's unequivocal, but I'm seeing some of the hallmarks of long-term trend change here as well. And as much as it frustrates me the prospect that value investors might get their way, and when CBA does break, if it does break, and goes down to $140, whatever it is, and those value investors are telling you, see, I told you it was overvalued, but they missed the most amazing run in a major ASX stock, probably in the history of the market, and they tell you how clever they were. Yeah, I would question that rhetoric. But unfortunately, or fortunately, whichever way you want to look at it, it looks like my trading, my model is starting to agree with them. So the thing about the long-term uptrend ribbon is that it does work very well. I don't know why, it just does. And it just tends to be that great delineator on a daily chart of where those longer term investors are starting to shift their intentions. So as long as we're holding that long-term trend ribbon, we're okay. But once we start to break beneath it, we've got some problems. And if we do break beneath it, go back up and test it, that's where we're in real trouble. Now, CBA is not there yet. I would classify me putting that into the downtrend list as a bit more of an aggressive, or it's anticipating what's going to what's going to happen a little bit. But also, in such a rampant bull market, it's also nice to have a few shorts that are highly correlated with the big ones as well. So I'm sort of thinking about risk management here, if you intend to go short, that is. I'm not calling CBA short, but I am saying that the short-term trend, I think, is unequivocally down, and we've got some real problems on that long-term trend. Okay, let's head over to National Australia Bank, which doesn't have any problems at all. I'm not going to spend more than the next 10 seconds on this, because I think it looks fantastic, and I think you know why. And then we'll go to Westpac, which I think is more in the NAB camp than the ANZ and CBA camp. But we can see here how the big fund managers that control the Aussie market, how they play their favourites, even within sectors. Certainly they play favourites across sectors, but also within sectors as well. We've got about 10 minutes to go, and I'm going to start to whiz through them for obvious reasons. SLC, this one's come from Peter. It's not that one, it's that one there. You might see some funny things going on just over here in the stock codes, and that's because my data provider provides me with all historical data. So there was a company called Soft Law Corporation many years ago that stopped trading in 2004, and I've actually got data for that. So if I wanted to look at it, I could, and that's why you'll see me sometimes just get to a code and flick down so we get to the current one. Don't get me started on why that's important, but it is important if you're doing back testing. Okay, Superloop. I think it looks very strong. I think, the short-term environment is moving back to demand-side control. We can see the line green ribbon. The long-term trend is impeccable. And once again, we can see how the long-term uptrend ribbon does its job. It just does its job. The short-term trend ribbon also was doing its job until it was broken. And then it's just a matter of managing risk at that stage. We don't have to be all out. If you're a longer-term investor, you're still holding probably a decent chunk, but maybe just taking a bit off the table here. Okay, but now we're thinking, okay, it's time to add some risk, and that's all I do. I just decide whether I'm adding risk or reducing risk. I don't care what price I've done it at. Stop looking at this bit here. If you can hide that on your screen somehow, it's the best thing to do. Because as humans, as I said before, we get anchored to prices and we say, I sold that at 180, I can't possibly buy it back at $3. Okay. All I care about is what is the right thing to do based upon my probabilities. I don't care what price I bought it back at last week, last year, or the year before. What is the right thing to do? Do I need to add risk? Do I need to reduce risk? And that is all I'm concerned about. Now, how you do it is up to you, but I think it's a very productive way of thinking. And for me, I'm more inclined to add risk on this one. I've got no qualms holding my existing risk position. I'm certainly not thinking about reducing at this stage. We do potentially have a little bit of a problem up here, because this was a significant point of supply in the past. We know there was a great deal of supply up there. Probably, I'm guessing maybe it was earnings related. It's FY 25 if it reports full year or half year report, I don't know. And there's something the market didn't like in that. And there are people who actually bought it at the start of that trading session. You can see quite a few people, double the average volume. That's what we're looking here is volume, and the red line, horizontal line is the average volume. So I can very quickly see what is above average or below average volume. That's why I have this indicator. And then I've got just a volatility measure, so I can see what is above average and below average volatility, which is the optimized true range. If you're wondering what that is, OTR, you won't find it on any trading platforms because it's an adaptation of the average true range, which I built myself because I feel that the average true range actually doesn't work the way it should. I made it work better, in my opinion. You might think it makes it work worse, but no, I think it works better, the one I've got. So you won't find those, but you can certainly find volume and you can replicate that. If you can't find OTR, okay, you won't find OTR, just use ATR, you'll be fine. If you want to set your screen up the way I am. So I've got price action, I've got trend, I've got volatility, I've got volume. If I'm missing something, let me know. I've got what the price is doing, I've got volatility, I've got volume. Trying to get these independent confirmatory technical tools because, ladies and gentlemen, if you're using the RSI and you're using a MACD, and I've seen this on people's screens, they've got a MACD, they've got an RSI, they've got Bollinger Bands. All of those things are based on price and price alone. You are not adding new information by putting another indicator on. Makes you look like a real expert, doesn't it? Makes you feel good that you've got all these confirming tools, but they're all confirming the same thing. That is what price is doing. So I say if you're going to do good technical analysis, you need to have as many independent confirmatory tools as possible, and having 64 price-based ones ain't it. Let's keep moving. The point of that is there could be some supply up there. We're probably seeing it starting to manifest a little bit now. I'm not too fussed about it because I don't think the market's too fussed about it, but I do want to see how the candles fall there. Happy in the meantime to run with my existing risk position. Let's go to Luke, who's got, hey Carl, not sure if people have been sending the request through, but my picks of the day of BCI and LRV. I think BCI still looks very strong. I can do this one very quickly because there's nothing in the chart to suggest to me that the supply side has any major control of the market, and therefore I'm happy to maintain my risk position. You're going to hear me increasingly speak in these terms. Oh, would you buy? Would you sell? Would you hold? Those terms are so silly. They're so flippant. Do I want to have risk? Do I want to be increasing risk? Do I want to reduce risk? What's my overall portfolio risk? Starting to sound a little bit like a hedge fund, which is not a bad way to sound. LRV, can do this one very quickly. Equilibrium. All of supply, all of demand, they're crunching the numbers. These small resources stocks are going bananas. I don't know if you've noticed. Go check out a ChartWatch ASX scans article. They are going bananas. But this one isn't. What does that tell you about how indifferent this thing is? Like, make no mistake, there are people looking at all these stocks and they have no interest in this one. Might change. You'll know when it changes. You'll see a big white candle. You'll see a big flourish of volume, removing a whole heap of supply, latent supply in the market, but it's not there yet. Would I have any risk on this thing? No, I wouldn't. I can't see any reason to apply risk to this particular opportunity. And that's all they are, opportunities, an opportunity to apply risk or not. Netwealth, I've just typed in the wrong code there. It's not that one. That was Newtel. Newtel, which ended at Newtel. That rings a bell. Was anybody trading the .com? Newtel. Oh, wowzers. Oh, it'd be fun just to do a session just on these and reminisce. 40 cents to $4. Like that. Newtel. Not OneTel. Newtel. I know I traded this one back in the day. But we digress. And there is a point to that little excursion, is that this stuff, ladies and gentlemen, I was going to use a different word there as well. This stuff has been happening long before Wednesday, 24th September at 12 p.m. that we've all caught up. And that's a bad thing as well. Take some of the stuff I've shown you, go back in history and see if some of this stuff works. Okay, Netwealth has some issues. I'm pretty sure I'm starting to put this one in my downtrends list for the same reasons as I've been starting to put CBA in. Short-term downtrend, we're seeing that long-term trend ribbon do its job. It's doing its best to hold the price up, but it slips. Hey, look, doesn't mean it's going to go down forever after that. Sometimes we can get these interactions, but it just means, for me, more caution is warranted. Okay, so for starters, personally, no, I wouldn't be have any risk allocated here, and I wouldn't be looking to allocate any risk. Let's do the last 5, say, and then adjourn. Going to go to Phil, who's got Orica, who still looks pretty good, and I think hopefully you're starting to look at these and go, actually, I know what Carl's about to say, and that's a good thing. Short-term equilibrium, no doubt about that. An increasing predominance of supply-side candles. Why is that happening? Supply-side candles are sell the rally. Okay, their demand running away, the demand being consumed by the market, that's a concern. Was there lots of demand in the system? Yes, there was, but it's starting to be consumed. That pool of demand potentially is running out. I would suggest to you, if we start to trade beneath a level like that, that would be a fairly strong indication that that demand, that pool of demand is no longer there, and we are in total supply side control of the short-term price. The long-term price would still be up. We'd be looking for a bit of a retracement to that zone. But this is a great example of a stock that I couldn't have a full risk position on. I wouldn't necessarily be completely out of it because of that long-term trend is still up. But let's say if I started with 100 shares, right now I'd probably be closer to 50 shares or 30 shares, order of magnitude, and probably not having many at all on that next break. So again, I don't play favourites. I don't care what they do. I don't have any hang-ups. Oh, Orica was my favourite stock. Or I'll own BHP to the day I die. Ladies and gentlemen, these are just cattle. They're just cattle to me. They're 3-letter codes. They're pixels on a screen. What they do is meaningless. And always say, and it's important that I say this, and I'll go an extra 2 minutes today just so I can get this in. Think of a farmer, cattle farmer, right? and he's fattening up his cattle, and he loves his cattle. He does love his cattle, doesn't he? Fattens them up. But at some stage, that truck from you-know-where arrives at the front gate, and he's got to start herding them onto that truck. He knows what's going to happen to these cattle, and he's patting them on the bum as they go through. Do you think he's going, oh, Betsy, oh, Daisy, oh, Cindy, oh, Maxine, oh, I'm going to miss you so much? Or do you think he's just going, yep, another $150, another $150? Okay, so I think you need to, well, I can't tell you what to do, but I can tell you how I treat everything I'm investing in now or will ever invest in. They're just cattle to me. They're just cattle. I'm just trading cattle, ladies and gentlemen. If something goes the wrong way, I don't get upset and start crying about it. I just get on to the next cow. Let's go to AII from another one from different Peter, I should say. And Almonty, yeah, this has been coming up in the ChartWatch ASX scans for a long time, actually. I'm going to say 3 months, certainly before I went on holiday. Was it that candle I put it in? Was it that candle I put it in? I can't recall. Was it that candle? And I know there are specific candles that I associate with me running them as a feature chart because I'm very consistent in what I do. But it still looks very good. And the initial response to this, if you have it, is, oh, I've done well on that. You know, better sell some. If you don't have it, the initial response is, oh, I can't buy that. That's gone up too much. But again, you're not thinking in terms of demand, supply, and price. You've got to stop thinking like you've got to start thinking like the market. The people who have cash right now, are they looking to invest into this share? Well, they are. Look at the chart. The people who have the shares, are they worried about it going up too much? I should go back a step. The people who have cash, are they worried that it's gone up too much? No, they're not. They're still buying it. They're buying it like crazy. The people who have it, are they selling it thinking it's gone? No, they're not. They're hanging on to their shares. So if everybody else thinks this is still a good deal, who are you to think it's gone up too much or it's too expensive? I'm going to start to just put the three letters on the screen. How about we do that? FRP, full risk position. For me, what you do, of course, is up to you. But that's the way I would think about that. I'd even be happy to add risk to that one because it's doing exactly what I want to see it do. NXD, I think this is 3. We might have 2 more after this. NetWealth Group, it's not quite there yet, is it? It's showing some signs of improvement. The best thing ever, it's got itself back above that long-term uptrend ribbon. I mean, it can't do anything, let's face it. It can't do anything while it's beneath it. Right, for me, what's the point? And you can see just how powerful that ribbon is. So that's good news, but it's hardly shooting the lights out. And again, in an environment where small caps are going berserko, not inspiring here. If I had it, I'd be really questioning why I had it. If I didn't have it, look, you want to see white candles, you want to see rising peaks, rising troughs, you want to see move probably towards 26 cents before you start to get more interested in it. And don't be despondent if Carl doesn't like your stock. Carl doesn't like any stock, and he doesn't hate any stock. Carl's literally just telling you what he sees on the screen and nothing more, because that's all I can do. So it doesn't mean it's a bad stock. I don't know if it's a good stock or a bad stock. It just means I don't see the hallmarks of either demand side control, or I might see the hallmarks of supply side control, which is what we see here. And certainly Telix is one which I want to say I put in on this day as a featured downtrend. I actually might have even put it a little earlier. Actually, I might have put it in somewhere in here to start off with as one of those sort of anticipating sort of early signals. So, if you got out around 24 and it hit 13, you're probably pretty happy. They had a little bit of a pop-up yesterday. But importantly, the candle that came in tells us that the market viewed that news. It certainly was up on the day. So if we look at the gain on the day, it sort of closed here on Monday and it closed there on Tuesday. So it was up, 10% or something, one of the top gainers in the ASX 200. And people go, oh, the Telix had a good day. But see, I look at that chart and I say that Telix actually had a really bad day because we don't want to see sell the rally activity. We want to see buy the dip. We want to see good news followed up with strong and consistent demand. We want to see investors saying, yep, that's the change. Actually, that's the key piece of information I needed to change my view on this stock. But when really all we saw is investors having the same view. Yeah, okay, it's better than it was, but it's still not something I want to own. So given the price has rallied, this is a great opportunity for me to sell. And that's what that upward pointing shadow indicates. And it happened on massive volume. So yes, there was a huge amount of demand, short covering, speculative buying. Telix is really cheap. What a great company. But that massive wall of buying, we know that as we can see the volume down here, was met with a massive wall of selling. And then we need to look at motivation. Who won the day? So the volume tells us how many people engaged, and the candles tell me who won the day and who was more motivated. And I put to you that upward pointing shadow, that black candle close, suggests that the supply side was more motivated than demand side. So I think this is still an issue here. It's not something that I would be adding risk to personally myself, and I'd be more inclined to do what the market's doing potentially, and taking this opportunity to reduce risk. Did I say 2 left? Let's go 1, 2. Fortunately, Anonymous asked Telix twice, but let's do... Alex has got... don't be anonymous. Why are you anonymous? Type your name in. Like, what have you got to lose? Let me know who you are so I can call you by your first name. Alex, thank you for putting your name in. Hi, Carl. Thanks for doing this webinar. I much appreciate it. It is a pleasure. I've been wanting to do these for so long because... Tappity, 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 tappity. I know I type pretty fast, everybody, but I'd much rather be talking fast like this. What's your read on Woodside? Let's have a look at this, and then we've got one more after this, and then we will adjourn for the day. That's not the Woodside, that's the Woodside. Let's go zoom normal. And it's important before you look at your next chart, please go to your default zoom, because you get that perspective. You start to see stuff like, well, look at that. And then look at the interaction with the long-term trend. Remember to come back to the holding and changes trend. Now, this did stick, and that's frustrating for me because I thought it was starting to look pretty good. It's probably frustrating for some of you as well. But all it means is if you started to add risk here, like I thought was valid, you had to get it out pretty quickly, okay? So that zoom... The problem is if you don't, you could be on a different stock, and let's just go to the one beneath it, and you could be zoomed in here doing some really sort of close-up analysis, and that's fine. You can zoom in, but if you go to Woodside, you can't really get some the full perspective on that trend. So it's important to go back to that default zoom and not get stuck in that zoomed in sort of window or view. Some problems here for Woodside, and it is disappointing for me, as I said, because I thought up here. It was starting to look good again. Short-term uptrend, nice motive phase, shallow pullback, white cluster of white candles. But it's Woodside, isn't it, unfortunately? And Woodside's going to do what, unfortunately, Woodside tends to do. It tried to hang here, it couldn't. This candle was the kicker. Unfortunately, the long-term trend ribbon has gone back to down. The short-term trend ribbon is down. And then you get something like that, a big gap, like boom. We don't think you're worth anything in that window anymore. Like, what does that tell you? Not a single person in the world, not a single investor wanted to get in and have risk on Woodside in that window. And it opened down and then it kept going until the close. And probably, I'm guessing, some demand got consumed on that day. All the value investors on Woodside's looking cheap. It's got great free cash flow yield is incredible. There are people out there that think like that, and therefore they want to buy Woodside, but they got smashed on that day. And then look at the response after that. When you get that big smash, that just unequivocal, you can't argue, you got served on that day, and there's just hardly any response. It's telling you that people aren't all of a sudden seeing a bargain. They're not. Now, I don't know what you think. You might go, oh, Woodside looks cheap. But again, stop thinking like you and start thinking like the market. I think we're going to our final one for the day. And where we would go, we'll go to Megaport. How about we do Megaport and then we'll adjourn MP1. It's a nice place to end, isn't it? Because I think it's looking very, very strong indeed. I'm pretty sure yesterday I ran it as certainly made the uptrend list. I don't know if I ran it as a feature chart. I might have been just a little bit concerned about that point of supply there. It's a decent point of supply. This price fell quickly from there, which means, quite a bit of motivation. Why were they so motivated? I don't know, but they were. And they might be motivated next time I get there. Okay, but it doesn't look like it. It actually looks like the demand side is happily consuming that latent supply in the system. I don't mean latent, like latent Hewitt. Come on, I mean latent, as in it's potentially there. And we won't know it's actually there, so it's potentially there. We don't know it's actually there until we see the candles. And the candles are telling us, you know what? It's actually not too bad. And if I zoom out, just want to make sure there's nothing sort of really sinister And you can go back too far here, and I think that is going back too far, so I'm pretty happy with that. Short-term uptrend, great candles, price action improving again, long-term uptrend, and really all it comes down to now, isn't it, and hopefully your brain has already skipped to this point, is, well, how do we feel about having risk on this stock? Well, if I had it, I'm happy to hold all the risk I have. If I didn't have it, I'd be seriously considering adding risk to this among all of the other opportunities. Would I consider, based upon what I can see, decreasing my risk position on this? No. So that's one option out of those three options that are completely off the table. And let's leave it there, ladies and gentlemen, because at the end of the day, ultimately, is that not what we're talking about? So I'm going to go back to the studio apartment here with the old keep calm and follow the trend. And that's kind of the crux of today's presentation. Hopefully, if you come back next week, it'll still be that. Are we adding risk? Are we keeping risk? Are we reducing risk? Are we following the trend? Ladies and gentlemen, it has been an absolute pleasure chatting with you today. Apologies if you didn't get your questions answered, but again, I'll be here next week, the week after that, and you come back and have another go. Hopefully, at the very least, you learned something new about markets in general, maybe about technical analysis, and you enjoyed yourself as well. I certainly did. All the best for your trading and investing. Till we catch up again. Bye-bye for now.